Hello, lazy landlords. Another hard lesson costing this landlord 8.5 years on their mortgage. I hope you guys can all hear me now. Thank you so much for everybody telling me last time my mic wasn't working and then now it was working. So anyways, let's talk about this mistake that this landlord has made and it cost them 8.5 years off their mortgage. So this particular landlord I was talking to had a $350,000 mortgage, and what happened was they decided that they were going to buy a rental investment property. And with this rental investment property, they were like, hey, let's use the equity in our home to buy an investment property. So they did. So what they did was they took their $350,000 mortgage and they increased it by $200,000 and they went to go buy an investment property. But the problem is, and then they bought an investment property and they're renting it out now. But the problem was that they combined it all into one mortgage instead of keeping it absolutely separate. Instead of keeping it from a $350,000 mortgage and a $200,000 mortgage, they put it all combined into a $550,000 mortgage. So what did this landlord do correctly? The first thing that they did correctly was they borrowed the down payment money. You absolutely always borrow the down payment money. So even if you have that savings, please don't use your own savings because that's after-tax dollars. If you really want to use that savings, take that $200,000, pay down your $350,000 mortgage down to $100,000, and then bring your mortgage back up. Okay. So instead, what you're going to do is you're going to always borrow the down payment, because by borrowing the down payment, you get maximum tax efficiencies. All right. So that's the first step, is borrow the down payment. But when you borrow the down payment, you're going to borrow it against the equity in your home. Always split it up into two sections. So in this particular case, $350,000 and $200,000. So for this landlord, they didn't do that. So what we need to do is we need to do a mortgage reset where I will split their mortgage into two. So being a landlord, owning 7 properties and being a mortgage agent myself for the last 25 years and doing rental cash damming, I talk to a lot of landlords, and this is a big mistake that I see constantly. So the way to rectify this mistake is to split it up into two. Okay, so that's the first thing. Will that involve penalties? Will that involve redoing the mortgage? Yes, it will be. But the benefits is they'll gain back and pay off their mortgage 8.5 years earlier. All right. So that's the first thing. The first thing is, if you are a landlord and you borrowed your down payment to buy an investment property, that's a good thing. But what you have to do is you have to make sure you separate good debt and bad debt, because what CRA will say is they'll come back and say you cannot deduct those $200,000 down payment. All right. So if you have done that, comment me below. I'll send you a link and then I'll show you what you need to do to reset your mortgage. All right. So that's the first thing. The second thing that with this particular landlord is the reason we were chatting is because they want to apply the strategy of rental cash damming. You see, they're on a 30-year amortization and they want to retire in 15 years. And they're like, Sylvia, I don't know how I'm going to retire in 15 years with no mortgage because I'm on a 30-year plan. The only way that I can think about is accelerating my payments, increasing my mortgage payments, but that means more money out of my pocket. And I just don't have that cash. I don't have more money out of my pocket because I have 3 boys that I'm raising. I have a full-time job. My husband has a full-time job. We really don't want to pick up a part-time job in the evenings just so that we can pay down our mortgage, because we all know that the more we work, the more taxes we pay, right? So instead, we talked about the strategy called rental cash damming. Rental cash damming is a legal strategy approved by CRA, stating that whenever you borrow to invest with a reasonable expectation to make money, i.e. rental income, you are allowed to deduct the interest costs. So rental cash damming, the ultimate goal of rental cash damming is to pay down your primary home mortgage. So we worked out the numbers, and now this client will be able to retire mortgage free by the time within the 15 years, which is their wish list. All right. So how does rental cash damming work? You get your rental income of $4,000 per month. What I'm assuming you're doing right now is you're taking that $4,000, you're putting it into a bank account, and from that bank account, you're making your mortgage payments, your property taxes, your condo fees, utilities, insurance, repairs. And at the end of the month, we hope that you're at zero. So you're at neutral cash flow, or maybe a little bit positive, or maybe a little bit negative. Okay. But preferably neutral or positive. And then at the end of the month, you're left with $0, and then you rinse and repeat again. But by doing that, this particular landlord was leaving $370,000 on the table without even knowing it. So what you're going to do instead is you're going to do this. You're going to take your $4,000 and you're going to pay down your primary home mortgage. Obviously, after I've done the reset where I split it $350 and $200, right? So you're going to take $4,000. You're going to pay down your primary home mortgage. That means your primary home mortgage will literally be melting away by a minimum of $48,000 every single year, because that $4,000 from your rental income that goes directly towards your mortgage pays down the principal. It doesn't pay any interest. It only pays down the principal. So for this particular client, they're literally going to watch their $350,000 mortgage melt away probably in 5 to 6 years or even faster. Now, your first question to me is like, whoa, hold on for a sec, Sylvia. If I took my $4,000 and I paid down my primary home mortgage, how am I paying for these rental expenses? Well, that's where you have, by having the proper product in place, by having a re-advanceable line of credit, you can use that line of credit to pay your rental expenses. So again, CRA says that if you ever borrow to invest with a reasonable expectation to make money, you can deduct the interest costs. So what you're going to do is you're going to borrow on your line of credit. You're going to borrow on your line of credit the mortgage payments, property taxes, condo fees, utilities, insurance, and any kind of repairs. And now this line of credit is going to grow. And with this line of credit, you can now deduct the interest costs. You know, as a landlord, when you file your income taxes, your accountant will file a T776. That's basically a fancy word for, hey, this person's a landlord, and here's a rental income that we're going to declare, and here's all the rental expenses that we're going to declare. Okay? But with your T776, for those who are rental cash stemming, for my clients who are rental cash stemming, we're going to have extra tax write-offs, right? You're going to continue deducting all your regular stuff on your T776, but you're going to have extra tax write-offs. So how does the T776 work? It goes like this. First line is rental income, $4,000, so $48K a year. And then from there, you give your accountant the interest costs on your mortgage, the property taxes, condo fees, insurance, utilities, or any kind of repairs, and you deduct it, and then you come up with a net income. And then that's the net income that you pay income taxes on. What happens if you have more tax deductions, i.e. tax deductions from the interest costs on a line of credit? Then your net income down at the bottom is even lower. By having that number even lower, it means that you'll get tax savings. And with these tax savings for T4 individuals, they typically come in the form of tax refunds. And then with the tax refunds, you're going to prepay your mortgage again. So in this case, you're prepaying your mortgage by 12 times a year, which is monthly on the first of each month, and then another time when you get your tax refunds. You can already imagine your mortgage melting away at exponential speeds. I was speaking with a client of mine. They're 3 months into rental cash stemming. And she told me this. She's like, Sylvia, in my last 5 years, I only paid down $30,000 in principal. In the last 3 months of rental cash stemming, I've already paid it down by $30,000. She's extremely excited to see what the results will be in a year. Already in 3 months, $30,000 gone. In the 5 years previous to that, it took them 5 years to pay down $30,000. That's how powerful rental cash stemming strategy is. Now, with rental cash stemming, you must do it properly, okay? Because the government's literally giving away money. They're paying you to be a landlord. So the government, CRA, is very specific about how you do rental cash stemming. And when it comes down to CRA, it's not if they will audit you, it's when they will audit you. So being prepared for that audit. So what I do is I work very, very closely together with you, and I set you up for success on any kind of audit. Because the whole idea behind rental cash stemming is properly documenting everything that you've done and making sure that you've done it properly. Making sure that you've borrowed properly from that line of credit to pay your rental expenses. A very specific way that CRA wants us to do it. If you are a landlord today and you're doing it $4,000 in, $4,000 out, and $0 at the end of the month, please stop doing that. Stop leaving money on the table. Connect with me. Let's chat. Let's have a complimentary call. Just comment me below. Comment melt below. I want to melt my mortgage, Sylvia. Help me. I want to melt my mortgage. Help me, Sylvia. And I will send you a link to book a call with me. And in this call, it's absolutely complimentary, full 45 minutes on Zoom, just you and me chatting about your financial goals, about why you want to pay down your mortgage fast. And then we're going to actually dig deep into your numbers, and we're going to say, okay, if you did nothing today, it will take you 30 years to pay off your mortgage. But if you did something today, if you applied the strategy of rental cash damming, it will take you 15 years to pay off your mortgage. It's an extremely powerful strategy, and it's absolutely legal. CRA wrote the law on it. All right, my friends, my name is Sylvia Ho. I'm a financial landlord consultant. I'm also a mortgage agent for the last 25 years. I'm also a landlord. I own 7 properties, and I do rental cash damming. If you would like to have a complimentary call to understand what cash damming is all about, 3 things you need to do. Comment melt below. Help me, Sylvia. I'll send you a link to book an appointment with me. Second thing is go to my website, cashdam.ca, cashdam.ca. Free training there on exactly the blueprint on how to do rental cash damming. And third thing is, if you would love to join my Facebook group, comment Facebook group below, and I'll send you a link to join my Facebook group. Now, this Facebook group is only for landlords. It's only for landlords, okay? And in this group, I give you more tips and tricks. All right, my friends, thank you so much for tuning in. I pray that you are all able to hear me now and that my mic was working. Tune in next week as I give you more tips and tricks on rental cash damming and on saving money. Take care. Bye now.